The economy is on shaky legs. Unemployment is the highest it's been since 2020 during COVID. Americans owe over $1 trillion in credit card debt right now, which is by far an all-time high. If you don't have the money to pay your taxes right now, it's not the end of the world. But don't use the IRS as your lender. Usually, the best strategy for paying your taxes is to not pay until you absolutely have to without incurring a penalty. But there are two separate penalties you're optimizing around. They're related to the taxes you pay before April 15th and the taxes you pay by April 15th. Let me explain. If you have to pay your taxes late, the IRS will charge you for that. And the IRS is one of the most expensive forms of debt you can have. Between the interest that compounds daily instead of monthly and the penalties they charge, the effective cost of paying your taxes after April 15th, assuming you filed your tax return on time, is around 14%. You may be able to save quite a bit on interest tapping into a line of credit you have or using a conventional loan at a lower rate. And for comparison, the maximum amount of time the IRS will give you on your payment plan is usually 6 years. And you're allowed to pay your taxes with a credit card. So an alternative strategy could be opening up a 0% intro period credit card if you need to buy yourself a little bit more time. Plus the cost of paying credit cards is actually like 1.75%. So if you have a 2 to 3% cashback, you might be able to get a 1.25% discount on your tax payments. So it's almost always a good strategy to pay your taxes for the year by April 15th, even if you need to tap into another source to do so. Then there's the question of whether or not to pay your taxes throughout the year. The IRS will charge an underpayment penalty if you do not pay at least the amount of tax you had last year in quarterly installments throughout the year. However, on this penalty, the effective annual penalty for not doing so is only about 2.75% to 3%. So if you are strapped for cash throughout the year or your money is invested elsewhere, it may not always make sense to pay quarterly so long as you get your payment in by April 15th. It's still an effective rate of 7%, but it makes more sense than 14%.